Happy Friday, ladies and gentlemen, and welcome back. It's your friendly neighborhood PM with your top 3 market points of the week. And last week I promised you earnings recaps, and man, do we have quite a few of them with serious price action going on this week. So without further ado, let's just dive into our number 3 name. So kicking us off at number 3, it's ServiceNow, falling almost 18% in a single day. It's its worst performance ever for a single day after they announced their earnings. Now, however, the earnings report was relatively strong. They issued a beat and raise on revenue. However, they issued a little bit more of a tepid guidance when it came to their margin profile in Q2, as they expect headwinds from the Iran war causing deals to be slower to close, as well as pressures from the integration of their new Armis acquisition, which is their largest one ever. Now, despite the beat and raise and the guidance that AI revenues will continue to increase close to $1.5 billion this year, an increase from their prior expectation of $1 billion, the market sentiment has continued to sour on software names, bringing into question how tangible and how real is the AI threat to these former legacy software companies. At number 2, it's GE Vernova, or ticker GEV, jumping around 15% yesterday in a single day, its largest jump since December of 2025. Now, the key thing with GE Vernova is that they sold more electrification grid equipment to data centers in Q1 this year than they did all of last year. This continues to just show the demand for power from the AI infrastructure build out that we continue to see from hyperscalers and data centers. Now, there are some skepticism around there right now as to whether GEV and the U.S. energy industry can even meet the demand that is continuing to surge, as they are going to encounter bureaucracy and political headwinds. And really, is it going to be becoming a supply cannot meet demand problem going into the future? But right now, forecasts remain very, very strong for GE Vernova going forward into the rest of the calendar year. And then finally, number 1, it's Intel, opening up close to around 26% after reporting their earnings. The company issued a blowout sales forecast going into the next quarter, expecting revenues to be anywhere between $13.8 and $14.8 billion for the upcoming quarter, vastly outsurging analysts' expectations of what they were seeing. Now, this is quite the progress to be made by management as they continue to try to position the company on their comeback story. They've been in the dumps for years. Now getting them back into position to benefit from the continued AI supercycle, as right now their key product, their CPUs, are really becoming a new, renewed sense of focus for a lot of our AI companies as they try to make sure that they have enough CPU power going into their GPU compute and offering more ongoing services for their AI software as they continue to grow forth. Now, this is quite the turnaround. This is getting Intel back to their pre-bubble highs even. So about to reach all-time highs given today. So huge, huge day for Intel. Now, that does it for your top 3 names this week. What are we checking out for next week? So next week, going to be more earnings. We're going to have Mag 7 names starting to report on April 29th. That's obviously Microsoft, Apple, Google, Amazon, and the like, all starting to report next week at some point. And in addition to that, we also have the Fed rate decision next week. We'll keep you posted on that as well. That's also very important, as we always keep you abreast of monetary policy. Right now, we're not really seeing an expectation for a cut at this upcoming meeting. And right now, the market is pricing essentially no cuts for the remainder of 2026 due to the headwinds caused from the Iran war. But as we get that decision, we'll keep you posted here in next week's video. Now, that does it for this week's video. As always, if you have additional questions, please reach out to your financial advisor. If you don't have one, please follow our link. We'll be happy to get you connected with one. But as always, please go out, enjoy your weekend, and we'll see you the same time next week. Thanks again.